All right. We are back with another episode of the Real Estate Investing Club. I hope you guys are having a great week wherever you are and whatever day it is for you. Should be a good one. This is officially Friday. We always come at you on the Fridays, and we're back to it, recording the episodes on Friday. So we're bringing that good Friday energy to you. This is going to be a good episode for all you guys out there who are interested in commercial like myself. We got Brad Andrus with us on the show from Northbridge Commercial. Brad does development. He does property management, and he focuses on light industrial self-storage with a little dash of medical office in there. So it should be a good episode. He also runs a brokerage, Access Realty Group, and he hosts a podcast called Weeks Ahead AI, all about AI and how small businesses can use it. So we're definitely going to be asking him a little bit on how he recommends people implement AI in their business. So, Brad, I'm excited to jump into this. Thanks for hopping on.
Absolutely. Looking forward to the discussion. Thanks for having me.
All right. Yeah, I told you before we got on here, we always start with stories. We like to hear how people got to where they are. So why don't you take us back to the beginning of your story in real estate and tell us how you got here?
All right. Well, probably like a lot of people, I mean, my beginning really was the first real estate venture for me was purchasing my own home. So a year or so out of college, thought, was married, kind of thought maybe it'd be a good time to buy a house. And anyway, I remember going through that transaction working. I was working at a community bank at the time. And so I was working with one of our mortgage guys that worked at the bank. And, he'd got me approved. We'd gotten the house in contract. He'd got me approved on the loan. And I'm sitting there working one day at my office, and I get a call from a lady. She introduces herself. Hey, this is Kim with such and such title company. And I was like, yeah, how can I help you? She said, well, I'm calling to schedule your closing. I'm like, I don't know what you mean. I'm working with Phil over at the bank here. And she's like, no, I know, but I'm the title company and we do I'm like, I don't know what you're talking about. Let me talk to Phil. I'll get back to you. So I had no idea even what a title company was. Didn't know what the process was, but anyway, bought that house and kind of felt like, okay, feel pretty good. Maybe I really had no aspirations really beyond that, but it wasn't 6 months later, a buddy of mine came and said, hey, I think we can buy this old house and add on to it, convert it into a duplex. I'm like, do you know how to do that? He's like, yeah, I think I can. I'm like, all right, I'll go get the loan. I'd gotten one loan, maybe I can get another. Yeah. And so got that loan and he did all the work and we rented out and it turned out great. I was hooked from there on, just hooked. And so anyway, really started doing a lot of rent houses, kind of, from duplex, a couple of duplexes and rent houses. And about 10-ish years ago, kind of through my lending background, commercial real estate lending background, kind of said, you know what, I think I want to shift everything over to the commercial side. And so sold all those rent houses and kind of really was fortunate to find one buyer, probably left some money on the table, but it allowed me to do a 1031 exchange out of all of those at one time into a couple of larger commercial properties. And so that was kind of how I got really my start as far as my direct ownership in commercial real estate.
Nice. I love it. And this was all down in the DFW Metroplex?
Yeah. I'm north of Dallas, about 40 miles north of Dallas in the Denton area. So Denton County area. Yep.
Nice. So it sounds like you had quite a good footing when it comes to individual single family rentals. And that is usually how people start out and mm-hmm. kind of where they see their trajectory going is they're like, we all live in houses. That's what we understand. And so they start buying houses and they're like, all right, I'm going to get 10, 20 houses and then I'll retire. But once you get into real estate, it's quickly, a lot of people move over to commercial. And I always like to ask people who did have success in the single family field and then move to commercial, why did you make that transition? What was it about the commercial real estate that was different than owning the single family?
Yeah, you're right. I had a plan once I kind of got hooked on it and was starting to acquire, I'd gotten up to 10 or 12, 15. And I was like, all right, well, there's no sense of stopping, and I ended up I kind of told my brother I remember telling one of my brothers one day, I was like, I've got a pay me every day plan. He's like, what does that mean? I said, well, I'm going to have 30 rent houses and somebody's going to be paying me rent every single day for the rest of my life, and I was like, that, it seemed like a pretty good plan at the time. And really, for the most part, owning those rent houses was good. I mean, I owned them, most of them in kind of one small town outside of the Denton area, and the demand was high, supply was low, and so I stayed full. But it just got to be a lot of work dealing with not dealing, but working with all those tenants, all the little issues that would come up, and the calls that would come, and I was trying to manage those myself, and I was like, okay, I'm either going to have to flip these over to a real property management, or again, kind of having been exposed to the commercial side of things through my professional background. I was like, maybe I could trade 20 tenants for one or two. What would that look like? And how would that simplify my life? And so that was really kind of what got the ball rolling for me. And it didn't end up being one or two. I think that initial transition from 20 rent houses was probably 4 or 5 tenants, I guess. 5 tenants is what I traded out for. And so ended up being just a lot, simpler management wise. Actually, most of those tenants were on triple net leases that basically pushed all the expenses to the tenant for the most part, and including property management. And so, at that point, it was like really freed me up. Okay, hire a property manager, and really my tenant's paying for it. And so, those were some of the big reasons I made that transition, and it was a good transition for me.
Nice. So yeah, it sounds like simplicity of operations. You wanted to replace the headache of 20, managing 20 individual families or renters, and then replace it with, businesses, just a few of them. And then obviously the scale there is a lot easier to scale from, buying individual houses to bigger properties. You mentioned triple net. So it sounds like you went into what did your industrial
those were all, yeah, they were kind of what I'd call light industrial, 20, well, I guess 7,500 square foot was the smallest, up to about 25,000 square foot metal warehouse buildings, little office, mostly warehouse, kind of properties. And so, the thing I love about those and there's other type of commercial real estate that's similar, but these are typically businesses, small, medium. Sometimes you get those large national tenants, but small, medium-sized businesses, but they're just entrepreneurs, operators. They're out there hustling and doing their thing. And when they have a problem, they deal with problems all day, every day, whatever business they're running. And so when they have a problem with their real estate, maybe their HVAC, or maybe there's a little plumbing issue, they don't flip out. I mean, they just kind of take it in stride. Maybe they call you, maybe they take care of it themselves, and just kind of add it to, hey, Sally, take care of this as well while you're at it, And so it's very different from a residential renter. Oh, Gabriel, you still there?
Yep.
Okay, somehow my little screen is disappeared, but it's very different from a residential renter that is, calling me and just flipping out, at 10 o'clock at night because there's a plumbing leak or whatever. And so, that was really refreshing to kind of start working with those kind of tenants.
Yeah, having businesses as the renter, it would be night and day in terms of the accountability and the I guess the agency that they execute over the property itself.
Yeah.
I still haven't.
I mean, there's some downsides to it, right? I mean, you trade 20 tenants for 4 or 5, and so one tenant moves out, you have 20, one tenant moves out, you're now still 95% occupied, so to speak. Whereas on the flip side, you got 4 tenants, one moves out, you've lost 25% of your occupants. And so there's some trade-offs to it. But for me, over the last 10 or 12 years, as I've really transitioned that route, it's been more positive than negative.
Yep. Yeah. But industrial, it sounds like, is not where you stopped. You moved on. At that point, you moved to self-storage. And, everybody on the podcast knows that I love self-storage, and we talk about it all the time. So I'm excited to hear, why did you make that transition? What kind of brought your attention to self-storage?
Well, so then, okay, went from 20 tenants to 4 or 5. Now, how about this? Let me go to 1,000 tenants, or 800 tenants, or 300 tenants, whatever it might be. We had an opportunity to buy our first and this I'm referring to a little group that I'm now, some of my partners in our investment group, but we had an opportunity to buy a storage facility kind of in the just on the outskirts of this downtown area here in Denton. And really at the time, we didn't know anything about storage, but we knew it was good real estate. It's like this piece of property someday needs, it needs to be scraped. This needs to be a mixed use multifamily project. It's not what we do, but we recognize the value of kind of where that land is. And so we just chalked it up as a covered land play. There's a lady there in the office that she already kind of knows how to operate it. We'll just keep her on staff and she can keep doing her thing. And we got in there and realized they seem to be a little low on their rent. I wonder if we can't, adjust the rents a little bit, tweak. And it's like every time that you made this adjustment, barely anybody moved out. And it starts to realize, wow, okay, my trade-off for having a bunch of month-to-month tenants and renters is that if the market justifies and demands and, is strong enough that we can push those rents instead of, a 2 or 3, 4% annual increase like a normal commercial lease, we could do 5 to 10, maybe 2 or 3 times a year, again, depending on the market. So that was pretty interesting, especially where it was is that literally low. They were really low on their rents. So that was really our first foray into it, first exposure, and said, you know what, this is a pretty good little business. Yes, that is a good covered land play, but we like this business. And so from there, we started scouring, kind of trying to find some sites to build ground up, and have successfully done that a number of times as well. So great little business, but it is a business. It's, and when I was in banking, I kind of started to learn, okay, there's certain types of real estate that are not just a real estate play. They're businesses. They're full-fledged operations associated with this real estate, and self-storage is one of them. Car wash is another example, and so there's several type of real estate plays you can make that really also come with a full-fledged business. And so you've got to be prepared for that. You can hire that out and do third-party management, but even then, you're as the owner, you're kind of managing more than just an asset. You're overseeing, a business as well. And so you got to really think about it in that way.
Yeah, absolutely. And that's something that I didn't, when I got into self-storage, is something that I didn't quite understand. Somebody had told me, but I didn't really understand, on the ground kind of experience that it is a business, and you do have a lot of transactions, a lot of people coming and going. And so it's a lot different than the other asset that we own is mobile home parks and RV parks. It's a lot different than that kind of real estate where people come, they stay for months on end, and there's not a lot of churn. And so, yeah, self-storage is definitely different. So do you guys manage all your self-storage facilities in-house? Are you guys vertically integrated, or do you have a third party?
Yeah, we are now. So when we started, when we started developing brand new and ground up, and it was kind of the leasing aspect of it, taking a facility like the first one we built was literally 850 units. And so it's like that seemed pretty daunting. We had experience managing like that first facility, and then we had bought a couple more smaller ones. And so, but those were already, 80, 90% occupied, and we're just managing rents, managing tenants, that kind of thing. But it was a little daunting to say we've got 0 tenants and we got to get this thing up to 85, 90% occupancy, right? And so we ended up hiring that out and hired third-party managers, and had really, really good luck with that. Hired a group that owns a lot of their own facilities, but does some third-party management in the DFW area. And so had a really good relationship with them for probably 4 or 5 years as we developed several others. And about a year and a half ago, we decided, let's take a hard look at bringing these in-house. I think we've kind of gotten a handle on the game, how to do it even from a 0% occupancy. And so we have now brought all of them in-house.
Nice. So lease up, you guys, it sounds like you've mastered that. What is the strategy you guys use? Especially, new construction, you're taking it from 0 to you're trying to hit that stabilized 85, 90% occupancy. What is the strategy you guys use to get that occupancy?
Well, right now, you probably can attest to this. self-storage market's a little soft. I mean, storage relies on people moving around, and so the housing market being soft right now, is kind of keeping, or, interest people talk about they're locked into their interest rates. They can't move. They can't justify selling their house and leaving their 3% interest rate. And so there's just not enough people moving around to
Mm.
really have a huge demand or strong enough demand for the product right now. So what we're doing, our strategy right now is just, I mean, I'm not saying we'll take any number, but we're looking to get it full. So get it as full as possible and take kind of whatever rate, get as aggressive on our rates as we need to be.
Hmm.
Fortunately, we try and structure our deals where we've got enough equity on the front end and enough interest only period in that development loan that we can, take 2 or 3, even 4 years to kind of build up that occupancy, even if it's a below, they talk about economic occupancy. Our economic occupancy is not where we'd like it, but our physical occupancy is, and we can rate manage that from there, in time. And so that's been our strategy over the last couple of years as things have softened up.
Yeah, we've also tried that, and I feel like it's kind of a double-edged sword.
Yeah.
Lowering rates that much. We went like 50% of market. We went pretty far down just to boost occupancy, and we
Yeah.
found that we started attracting tenants that we didn't want in the facility.
Yeah. Yeah.
And people started living in their units. You got to kick them out, and
Yeah.
people will start breaking in. So how do you guys manage that aspect of it, of attracting the right clientele to start renting from you?
Yeah. I think we're trying to be in just the right areas. I mean,
Mm,
eh, eh, storage is an interesting business because it's kind of been around long enough, and it's kind of, there's a little bit of a science to it. And so it's really a 3, maybe 5 mile game, right? And so,
mm,
your tenants mostly are coming from about a 3 mile radius, within about a 3 mile radius, as you know. And so we just really try and focus on where we're putting it. We might go into some areas that are a little green, but we know what growth is coming and the
mm.
type of quality of growth that's coming. And so we're just trying to be in areas that, I'm not saying there's all kinds everywhere, but
Yeah, yeah,
if we
yeah.
can kind of target areas that for the most part the demographics are good,
Favorable.
economic demographics are strong, and you know and I wouldn't say we've gotten quite as aggressive as you've said on our rate cuts either. So maybe that's part of it, but it certainly happens, and that happens in any facility or any property you have. You're going to have some rotten tenants, right? And so management, good strong management, trying to underwrite that or take care of those problems just right off the bat as they come up. Management's key to any kind of real estate that you might own.
Yeah, I mean, you mentioned location, and that was that was a lesson I learned the hard way right at the beginning. I was chasing. I wanted to flip some storage facilities, and so I bought
Yeah.
this facility. It was just like it was dirt cheap in this area in Hot Springs, Arkansas. And
Yeah.
I was like, this is if I did this would be like a 16 cap at the back end. And so
Right.
I ended up buying it, but I learned if you buy in the wrong spot, you're going to get broken into every single day, and it's a problem.
Yeah.
So we definitely have switched strategies since then.
Yeah. Yeah.
All right, you've already mentioned a little bit about the market. Let's go one level deeper into that. There's a lot of uncertainty in the market in general right now. What do you see for the next year or two? Like, what is your guys' projections?
Man, we have been for the last several years really thinking, okay, there's been a lot of talk of distressed assets. Maybe we'll find some opportunities in those, and just loans maturing. You hear about this in the news and people talking about it, but it's like we're not seeing that, not feeling that. I mean,
Hmm.
yeah, things are a little soft, and people are like, developers are kind of having a little harder time filling up their space. But I don't know, Gabriel, something in the last, and maybe it's this one particular asset class that we're starting to find some luck in. And so boat and RV is another kind of type of storage facility, right? That a lot of times in our storage we'll add some RV and maybe some canopy, some fully enclosed, some canopy, maybe a little bit of open parking. But 20% of our units are that type of, boat RV kind of facility or storage. And so, but we have also developed some just entire, 100% boat and RV facilities. And those really, that was kind of the thing to do coming out of COVID. The demand was huge. And so that has softened even more than just traditional storage. We still own and manage those. And again, just doing, fighting tooth and nail, at every turn on those. But for the most part, because we're doing them, have good, clean facilities. We manage them tight. We're trying to keep the upkeep right. We're staying full. And so maybe not kind of quite at the rents we want, but in the last 6 months, we have started seeing opportunities to buy distressed assets. And this is one asset class in particular that we have identified that there's a lot of distress in, at least in our area. And so we've actually acquired the notes on 4 or 5 properties and kind of stepped into the bank's shoes. And if we couldn't end up working out those loans, have ended up foreclosing on those properties. And so I don't know that this will be our business model long term. We're kind of enjoying it, but like a lot of real estate, small real estate groups, we're opportunistic, and so we're looking for kind of where we can get some good returns. And we know how to own, we know how to underwrite, we know how to manage, we know how to take care of properties. And so where are those opportunities coming in? And I think we're seeing an opportunity for us anyway in the next year and a half of probably playing in that realm of more distressed assets. Now, if interest rates come down, and they are coming down, as they continue to come down, I think that it's certainly possible that people will kind of work their way out of those situations. But I remember in banking, we used to say, hey, the market's about to turn and get really, really rough, at least the housing market, when you start to see all these new builders show up. Basically, these guys that they're not builders. They just, hey, I can make money building a house, and I know how to call some subcontractors. And so they start building houses. And, you start to see a lot of that. And it's like there's just too much hype, too much, going on here. It's going to crumble. And it kind of does. Well, what I've seen in some of these asset classes, there's just too much capital, too many, and I don't want to knock on anybody, but I mean, too many people that really didn't know what they're doing jumping into some of these spaces. And so, and I don't want to claim to be the end all be all that we know everything, but if you really aren't on top of your game, well, you can stumble pretty hard. And so I hate to to take advantage of other people's misfortune, but that's kind of what we're seeing some opportunities in. So we're kind of excited about that, really.
Yeah. I mean, commercial real estate is definitely no joke. You need to have a game plan, and you need to be ready to build systems to fix problems as they come up. One interesting thing that you mentioned there is that your guys are buying the notes. And so you guys are you buying like seller finance notes that people have with their property and they're not able to support them anymore? Or are you going directly to banks for non-performing notes?
Yeah, these have been bank notes, traditional bank, community banks. And, in our little, I would preach to anybody for at least from my opinion, real estate's a local game. Like I just encourage people to just dive into your, 20, 30 mile radius. If it's a strong area, and we're fortunate in our area that it is, I don't even get outside of, there's plenty of opportunities in Dallas or Fort Worth. I don't even go down there hardly. We're just kind of in our 20, 30 mile little bubble here, and get to know all the players, get to know really what makes the real estate work in this area, get to know your lender, your bankers in the area, your community bankers, your other developers, your property managers, your title companies. Get to know these folks. And as you kind of are successful in doing, owning and managing real estate, and you have good relationships with all these people, those calls start to kind of come your way. Hey, Brad, I think there's, I'm the community banker calls me. Hey, I kind of got a little problem here. What do you think? You think you can help us? You got any advice? Or maybe we just like to get rid of this one. Y'all interested? And so those, now that's been upwards of 20, 25 years of relationship buildings that's led to these kind of opportunities. But I just don't think for us, I don't think I'd have those same type of opportunities if I was trying to play in 30 other markets. It's
Mm,
just no way I could have those kind of relationships. So that's what's worked for us.
yeah. Yeah. And I've noticed, I mean, we've done, I think you're episode 610. So we've had a lot of guys on the show. And I feel like people kind of fall into two camps. They either focus locally, so they focus on their market, or they focus on an asset. And they either get
Yeah.
good at their market, or they get good at,
Yeah.
you name it, short-term rentals. They get good at self-storage. They get good at multifamily. And you really do need to both strategies work. I mean, people are out there crushing it with both strategies. And so
Yeah.
but you really need to focus in on one of them, and you can't try to like do all of the different assets nationally. Because if you don't have the boots on the ground, you don't have the connections, you don't have the experience, and that's an easy way to crash there.
That's a good observation, and that makes it really resonates with me. Pick,
Yeah.
yeah. If you want to be in a bunch of places, be very, very, very narrow in what you're doing. If you want to really cultivate the field around you, yeah, maybe you can diversify a little bit more.
Yeah. All right, man. Well, dang, we're way past the 20-minute mark. We're at 26. So I do have to push us on. I know
Yeah.
it's all good though. I do have to push us on to the quick question round. There is a question in this section. I wanted to talk about your focus on AI, and we'll get to that. I'm still keeping it in this podcast because I want to know your opinion. But we are jumping into the quick question round. Are you ready?
Yes.
All right. It starts with education. It could be any form. I need two recommendations, one for general life wisdom, and then one for real estate. And this could be a book you've read, a conference you've gone to, a mentorship program you've been a part of, anything like that.
Okay. Well, I think for the networking is what I would recommend people get into. And so if there's a particular asset class that you're interested in, there's some sort of network or association around that asset that's probably pretty local or somewhat local. So that's where I would turn. If you want to get into storage, like the Texas Self Storage Association, you just start attending those conferences and kind of networking with those people, and even vendors. Like you go to the vendor fair and start talking to them and understand what they're trying to sell you something, but you learn so much along the way. So that's one of the places I'd point people. Nice.
So conferences, and then in general, and networking. And you mentioned TSSA. SSA has a conference. They do it. It's been bouncing around pretty much everywhere. I was going to say they do it generally in Texas. At least I've gone to a Texas.
Yeah, it's been here a lot.
Times.
Yeah.
Yeah. All right, let's move it on to the next question. This is for the younger version of Brad. Let's go back to that guy. Let's say, he was still working at the bank so many years ago, just buying that first single family, I said, or duplex with your buddy. Go back to him, look him in the eye, give him one piece of advice moving forward.
Don't get too down on your failures, man. And because you're going to make some mistakes, you're going to have some failures. And I had, in that downturn, in 2008, I really stumbled and I had some missteps and but overall I can't appreciate those missteps and that those failures enough, because they really taught me a lot. So I just say, don't get too down on your mistakes. You got to learn from them. You don't want to repeat them, but don't get too down. It's a long game. And if you keep fighting and grinding, you can come out ahead.
Yeah, absolutely. Keep moving forward, and you're going to get hit in the face. It's just going to happen. Pretty much every deal, something goes wrong. And so you just got to keep moving forward. All right, next question. This is kind of an easy question for you. I think I know how you're going to answer it, but I'm going to ask it anyways. The United States is a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Yeah, Denton. No, yeah, certainly this DFW area, we love it. So it's a strong, great market to be in here.
Yeah. Well, and I feel like you got, luck is half of everything, but the the I can't remember what highway it is from DFW up to Denton. You guys are having a huge
35.
growth.
Yeah.
Yeah,
Mm-hmm.
yeah. The all along that corridor, you guys are crushing it. So that's definitely
Yeah,
a good area to be in.
it really is. Yeah.
All right. And the next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what is your favorite way to find new deals?
Mm. Like I said, I think the building these relationships with other people and not knowing, again, not knowing that a deal, it might take 5 years for a relationship to turn into something. And so, for me, it's all about building relationships with other brokers, with other developers, bankers, title company. I mean, we've got some great relationship with title companies that also from time to time call us and say, hey, let me connect you with this guy. He's trying to do something or wants to sell something. And so, for me, it's all about the networking. I mean, I don't have a silver bullet and call, if you're cold calling a seller and here's what to say, for me, it's about relationships and hopefully somebody else can kind of, that seller trust can kind of make that warm introduction for me.
Nice. All right. Speaking of things going wrong, let's talk about lessons learned. Not every deal we get into goes the way we expect it. In fact, as I mentioned, pretty much every time something is going to go wrong, and that's when we get to learn a lesson. So give me a single deal that went a little bit sideways for you, and then what was the lesson you pulled from it?
All right. Well, I go back to that '08. I thought, hey, you know what? I've been building some of these single family houses for myself, rent houses I ended up, I didn't tell this story, but I ended up saying, I think I can GC these. And kind of back to my point about, hey, not everybody's a GC, but for my own rent houses, like, well, I'm having a hard time trying to buy some. Let me build some. I can find these lots and build some. And so that was working. And then it's like, some people were like, hey, can you build me a house too? Well, sure. I guess I can. I know how to do it. Well, that led me to, there aren't enough lots out in this area. So let me develop some lots and then I can build on those. And so anyway, the lot development game, which I know a lot of people are very successful in that business. That's a dicey game. And for me, I got stung pretty hard there. And primarily where I got stung was the fact that I had debt on it. So
Mm,
the biggest lesson I learned in that time, and I've tried to apply for the rest of my career, is I still like debt. I mean, leveraging it, using leverage and kind of maximize returns. And you just simply don't have enough cash to do everything, liquidity to have to do everything you want to do. So I'm a believer in leverage, but for me, it's only when I know that I've got a strong income source to offset that. So I don't want debt on land, raw land, vacant land. I don't want it on. I mean, I might take it on a development deal where I know I've got a great plan for getting income coming in there. But anyway, that was the big lesson learned there. Especially in particular, don't take debt on raw land. If I don't have a great way to repay it. So.
yeah, that makes 100% makes a lot of sense. You don't take debt on something that can't pay itself off. So, yeah, I like it. All right, next question is the obverse of that. It's talk about the highlight reels. Sometimes you get into a deal and everything seems to go right, and it kind of stands out in your mind as one of your favorites. So, take us back to your favorite deal. What was it, and how did it go?
Man, I think I'm in it right now. I'm just having a lot of fun. This has been a couple of these properties that we now own. We acquired through foreclosure, and again, I'm trying to glaze over the fact that somebody else was really suffering there, and so I know that's a real part of it. But for us, it's really been enjoyable to work with the bank, have again from a long-standing relationship that initially said, hey, I think we might own, the bank says we might own these. Could you manage them? And I'm like, do you really want to own them? Even for a short time? No, we'd really just rather get out of this. Okay, can we talk about buying the note? And so the negotiation of that then led to trying to work it out with the borrower, that then led to, us being, again, as the lender going and foreclosing. And now we own this thing that it's not through a traditional sale where the seller is necessarily cooperative in sending all their files over. This is a foreclosure distress sale. And so you're having to work through all those kind of issues. And then coming out on the other side of that, we've sold a couple of those and have been very successful in doing so. So those have been really fun.
Nice. All right. Okay, so we're on to the new question in the quick question round, and this one is about AI. I've been a big proponent of it recently. Well, as long as I've been involved, I understood the impact it's been having or it could have on a business, and I've been trying to put it everywhere I can responsibly do so. I know you got a podcast about AI, so tell us, how have you been implementing it in your business, and what are some recommendations you can give people who want to start themselves?
Yeah, well, so certainly love for any of your listeners to check us out. Weeks Ahead AI, all the streaming platforms on that podcast. But for us, one of the thing is that we're finding is like, hey, let's just find some of those tasks that are really they're repeatable, they're monotonous. They don't take a lot of necessarily intelligence to handle, but they're kind of something that's got to get done, right? Identify that. We love the Plod. I don't know if you're familiar with the Plod, but Plod is basically it's a recording device that it's an AI recording
Oh yeah,
device. You see them now in any Zoom call, you jump in, somebody's got one on automatically jumping in, but this is a separate device. And I would just encourage people to check out that tool, get it, start talking to it, and just kind of talk through your day or your week. And hey, here's some things I deal with that they're so annoying, or I have to always do this, and it takes more time than I think I should be dedicating to it. And as you describe it, and then you let AI kind of give you a roadmap for how you could solve that, there's some real gold there. And then eventually from that, we're what we really believe in strongly is building agents,
mm,
specific agents to handle specific tools or tasks, I should say. And so I'll give you one quick example, Gabriel. We built an agent that analyzes our monthly financial reports property reports that we give to. So we manage upwards of 80 properties. 2/3 of that's probably third party. And so every month we send out a monthly property management report that's 40, 50 pages. I mean, it's got a lot of detail in there. And we were kind of having this bottleneck, getting those out to our clients on a regular, a monthly basis in the timing that we wanted to. And a large part of that was not just the compiling, but the reviewing. A final review. Did we have everything right? Is it even organized? Do we have the right name on this thing? And then, are there any variances in the budget versus actual that we need to point out or we can speak to when we send this to? And so we build an agent that just reviews. Hey, before we finalize this and send it out, review this report for these 10 things, and we've given it 10 very specific things to look for. We throw it in there. It does that analysis. And now it's taken our senior property manager, she was spending, 2 days on these reports, getting them out. She now spends maybe 2 hours. And so
yeah.
it's just things like that. And so finding those, whatever it may be in your business that's kind of repeatable, but monotonous and time consuming. And how can we train an agent to take care of that work for you?
Yeah. Yeah, absolutely. I mean, even my podcast, it went from taking the VAs like 10 hours per episode or per week to get everything, create the thumbnail, get the description for YouTube, all that stuff. Took them a ton of time to do it every single week. And now we've implemented AI at every step and it takes maybe 30 minutes. It's crazy
Right.
how much it like cuts it down. So yeah, I love to hear that. And that Plod, is that the thing that you put it on it like it's like a lapel pin?
They do have a lapel pendant kind of thing. I don't use that. The one I use, and I unfortunately don't have it with me, I'd show you, but it just actually there's a magnet, it just clips right on the back of your phone. And so you can use it while you're having phone calls, or you can just have it out. I mean, it'll literally record phone calls for you, but it, also just take it off and just set it down there in the desk while you're meeting with somebody. And so we've used it during lunch meetings, even when we're discussing something and lots of noise around, but it picks it up, deciphers it, and sends you kind of the you can either get the transcript from it or the summary from that meeting. So very
interesting.
good.
Yeah, I've been tempted to get into those. I haven't done it yet, but maybe
get a Plod.
Yeah.
Plod, Gabriel. I highly recommend it.
This will be the straw that makes me actually do it.
Yeah.
All right, that is the last question. Well, actually, there is one more question, and this is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
All right. Yeah. Just look for me, Brad Andrus, on LinkedIn at Northbridge Commercial Real Estate there. That's probably the best way. Northbridge Inc. is our website. But I'm not regularly posting on LinkedIn, but I'm fairly active in there, and I think you can kind of find some posts that you might be able to pull some meat from. But that Weeks Ahead AI podcast, I think that's probably a great place for people to tune in and get your mind thinking about. And again, we're real estate centric focused, but we're talking to other business owners and operators. Just start getting your mind open to what the possibilities are using AI. And it's not going to, we're not looking to replace all our employees. We're just trying to augment and,
Mm-hmm.
support and like you say, save some time and be more productive. So.
Yep, absolutely. So I will put those links in the show notes. If you guys want to reach out to Brad, get involved, maybe listen to his podcast, all you got to do is click that little more in the description. It's going to pull down that full description, and in there you can find his links.
Cool.
All right, man. That wraps it up. Thank you very much for hopping on the show.
Yeah, thanks for having me. I've enjoyed it.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review, a comment, anything like that. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.